as part of the new AMIR legislation, clients are mandated to also operate an active account in Europe at a European CCP, where it concerns their euro-denominated interest rate swap business, but also for their short-term interest rate futures exposure. So we have come up with a solution there and developed an interest rate swap clearing offering. We already established that a long time ago, and also more recently we established now a short-term interest rate futures offering as well. And then also using the capital efficiency concept where we offer netting across these products, we also believe that we can help clients meet these obligations in a very capital efficient way.
How has your transition to CEO gone?
It's been a fantastic time at Eurex. I'm now in the role for 13 months. Having also joined the organization from a clearing member, I can also see that how important it is to service also customers well, to listen to them, and also understand the dynamics of both an exchange and a clearinghouse and how that combination can work very effectively. In the last year, I spent quite a lot of time to get to know our clients. Many of them I already knew because there were also clients at the firm I used to work. But also I knew many clients from my time at the FIA, where I served on the European Advisory Board as well. So these relations have been kept very strong as well. And listening to clients is something immensely important, and it gave me also a large amount of insights.
What prompted your recent restructuring, and how has it helped clients?
Eurex has for the last few years been organized based on asset classes. So we had a very strong asset class focus, whereby the colleagues from the exchange were focusing on the equity and the index segment, and colleagues from the clearinghouse were focused on the fixed income segment. Well, that's been very successful and also brought us a significant increase in our business, especially the fixed income business performed really well and also saw quite a large increase in its activities. But we also see that this asset class focus has resulted in a duplication of activities within the Eurex organization. We had, for example, duplicative teams to cover our clients, which are the sales colleagues, but we also had duplicative colleagues focusing on product and business development. With the merger of these teams across asset classes, we now have one new global products and market development organization, and we have one global sales and marketing organization. And it means that our clients are now benefiting from more simplified interactions points, so less overlap in terms of client coverage. And the good thing is that with this reorganization, we've also freed up resources, which we can now invest in pursuing further growth for our company. And the resources will be allocated towards covering more buy-side firms, including hedge funds, asset managers, alternative funds, and pension funds as well, and also retail brokers and retail aggregators. Those are client groups which historically we have covered, but we believe with more resources we can deliver even further growth to our organization.
What are your top priorities for Eurex?
From an exchange perspective, we need to ensure that we take away as much as possible any form of access barriers that clients have when they want to trade our products. We're looking at the product mix, the available products that our clients want to trade. So in the last few years, we've also introduced different contract sizes, such as mini contracts, micro contracts, but also daily options. In addition, we're looking at technical means for clients to connect to us, and also see if new forms of technical connectivity can also help our clients to get more seamless access to our exchange. From a clearinghouse perspective, it's quite obvious that the combination of having an exchange and a multi-asset clearinghouse delivers a lot of synergies for our clients. And this is also underlying our strategy for fixed income, the home of the euro yield curve, where clients can clear their short-term part of the curve, their mid-term part of the curve, as well as the longer-dated interest rate swaps, all into one clearinghouse with cross-margining and netting benefits across the yield curve. So this one margin pot approach means that you have a lot of means to have capital-efficient exposure management, which we believe is really helping the industry as best as we can. Thirdly, what is important for us is to also strengthen liquidity on our exchange, which is also why we have recently introduced a new liquidity provider arrangements for the Euro stocks options, which is also helping market makers to quote in each of the individual series.
What is the progress on sponsored access models to lower barriers for buy-side clients?
The sponsored access solution, we believe, fills really a nice gap of clients who would like to have a relatively fast connection to the exchange, and also the ability for clients to use their own order management systems to access the exchange's matching engine, but without having the burden of establishing a direct membership to our exchange. As for some clients, it is not feasible to have a membership on our exchange because of regulatory reasons or because of preferences on where they want to be maintained. And with sponsored access, we're allowing our clearing member clients to make their trading membership available to their end clients to directly connect to the exchange. So this is done also on the basis of customer requests, and we're looking now to implement this and establish this as per November this year. So as per November, we expect that clients will be able to offer connectivity lines. What is important also with sponsored access, that there is a very robust set of pre-trade risk controls that are available for the clearing members, so that they can monitor very carefully all the flow that goes through their membership, and that the clearing members are in full and sole control of whatever takes place.
What is the impact of the launch of the Euro Stock Options Liquidity Provider Framework?
Has been quite a drastic overhaul compared to our historic liquidity provider arrangements. You should see it as that in the past we used to incentivize market makers to quote more the at-the-money strikes and also the nearest maturities, whereas in some of the out-of-the-money strikes or the longer-dated maturities, there was not a lot of liquidity on the screen. And we also saw that this is one of the reasons why we may not have seen a lot of activity taking place in these series as well. And this is something we wanted to improve also in light of our strategy to take away access barriers. And with the new framework, we have now seen that a lot of more activity is taking place on all of these strikes which were not traded before. And also the average daily volume has significantly increased, and we have seen trades in all of the series. We're only 6 weeks in the program, but so far the liquidity picture is looking sufficiently and significantly stronger than it was before. Also, customer feedback has been really strong. Also, if we consider some of the more volatile days that we had in recent weeks. So all in all, we're very happy, but still a bit early to give a firm conclusion. If this is a successful rollout, then we're also looking to expand this further to other products such as single stock options.
What innovations at Eurex are you most excited about?
We've introduced many new products over the last few years. You mentioned a few now, but also dividend futures we've launched, but also total return futures. If I think the product that is most promising and also most promising considering the recent uptake, it definitely has to be the credit index future product. It is a futurized product for the swap market as well. And I think with this product, clients really see the benefits of having a listed product where they get more exposure towards a clearinghouse. So risk-weighted assets are significantly reduced. Clients no longer have bilateral counterparty risk. We've also shown that we can create a swap market into a very liquid instrument, and the volumes are really ramping up very rapidly as well. And I think the credit index future is an example of where Eurex has come up with a good innovation that really solves a problem for clients where they don't want to face the counterparty credit risk anymore, and in return they get a highly liquid products with multiple underlyings as tradable instruments.
What is Eurex's approach to digital assets and tokenization?
In terms of digitalization and distributed ledger technology, we believe that this technology can serve really as a good means to further reduce risk in the financial infrastructure chain. For example, we are now starting next week with a pilot with one of our clients, where we will introduce a digital collateral ledger that can be used to indicate a transfer of collateral between accounts, and then the indication of proof will be instantly as well, and that avoids a client to actually pursue an actual transfer of collateral. And I think with pilots like that, we also help our clients to experiment with these new technologies and also really see how can we reduce risk in the chain and also use the technologies where we believe in a very meaningful manner. In addition, Eurex is part of the wider Deutsche Börse Group, and together with our affiliates, we're also using more crypto products as well in our total product offering. For example, our sister company Clearstream is now offering custody for Bitcoin tokens, which is new. We're the first CSD that offers crypto custody. And if you combine that with the futures that are traded on Eurex, on Bitcoin and Ethereum, and also the crypto finance offering we have within the group, we believe we have a very seamless offering as well of financing, trading, and custody for crypto assets, which also make this a very capital efficient solution, which we think is also new in the industry.